Hello traders, Gary Wagner here, just afternoon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, first day of June 2018, and this is the daily report for gold and silver, our weekend review, and what an interesting week we have seen. Pressure on gold, strength in the dollar kind of continued to prevail, specifically with a very strong jobs report that came out this morning. We'll talk about that in detail, along with our activity and trades this week. Gold closing lower, $12.97, down about $7.80 after hitting a low intraday of about $12.93. A 3-cent decline in silver at $16.42, and an uptick in the U.S. dollar, 94.15, and a 200-plus point rise in the Dow Jones Industrial Average, 219 points, closing at 24,635. Finally, Bitcoin futures closing off by about $75, 74.55 and 74.70 on the CBOE and CME futures exchanges. Traders, extremely interesting activity today with the release of last month's jobs report from our Labor Department. And the jobs report actually came in stronger than expected. It pushed stocks higher, the U.S. dollar higher, and pressure on gold. However, what is really unusual about today's activity was that preceding the report by over an hour was a tweet by President Trump in which he basically let the cat out of the bag, saying he was excited about the numbers, obviously indicating a strong report. We're looking at a 5-minute candlestick chart, and on this candlestick chart, I've put an arrow at approximately where gold was trading at just prior to the tweet. The jobs report, of course, would come out approximately an hour and 10 minutes later. We can see that the market was trading at roughly 1300, 1302. This is basis the most active August contract. From that tweet forward, what we saw was a methodical decline down to the lows today, which came in at 1293. And traders, obviously, the tweet affected the U.S. dollar, the U.S. dollar gaining strength immediately after the tweet itself, moving from the lows of the day at around 93.85 up to these highs above 94 on the dollar index. While market participants certainly got a jump on the report, I believe that the net result in terms of market moves today were inevitable once the report was released. And traders, in terms of our activity this week, it was a most interesting week, and we are currently in a long position. We'll talk about that in a second. First, at the end of last week, we actually had a long position in June gold in which we got in roughly at 1289. At the same time, we did put protective stops into the market at 1284. We left those stops in play until last Sunday during Memorial Day weekend, in which I suggested that we move our stops from 1284 to 1293.90. My attempt with that was to have traders put that in early Monday morning, although the majority of our subscribers put it in on Sunday. The market did come down on Monday and knocked a majority of our subscribers out with about a $550 profit per COMEX contract, because on the following day, I issued a recommendation to actually roll over June long contracts into the August contracts. And in that case, you took a profit of about $1,300 per contract, but all clients are now long August gold just above $1,300 per ounce. Our stops are sitting at $1291. Low today, $1293.40. My recommendation for the weekend is obviously to maintain our current long August gold and to maintain our current stop. Traders, as far as silver goes, it did close lower on the day as well as lower on the week. The key, as far as I'm concerned, is that we are continuing to see silver trade in a narrow and defined trading range The one thing that I am noticing that is a little different over the last couple of weeks, this being a weekly chart, is on a weekly basis, we have started to see a series of higher lows. We've also started to see a series of lower highs. So we are forming a compression triangle of sorts, but we are forming them not after the market's made a major move up or a major move down, but rather as it continues to trade in this consolidated narrow range. I am still remaining neutral to bearish on silver. And traders, lastly, a quick look at Bitcoin futures. Today closed down about $75, $74.70. The key, as far as I'm concerned, is since we have seen this market come under pressure after reaching this high here just shy of 10,000, for the first week we have actually seen an attempt at consolidation, and it is consolidating right at our forecasted low numbers that we looked at, which is 7,200. My sense is that if we can maintain some level of support, we could see Bitcoin cash and futures begin to move higher, with the first area of resistance coming in at around 8,100. Should pressure return to the market, I absolutely believe it will make a challenge and play to the $6,000 mark. My current thinking is that the probability is higher that we will find support and move up a little bit rather than trade to lower pricing next week. Traders, no doubt, we had an interesting week, and we had an extremely strong move to the downside in gold and upside to the dollar, immediately following a tweet by President Trump coming out an hour early before the job numbers came out. My sense is that that market moved where it was going to move anyways. It just gave traders a jump on the gun, so to speak, but it's certainly not something we want to see from the leader of this country. Hopefully he'll correct that in the future. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you next week for another daily update and review. Bye-bye.